Welcome back, everybody, to Real Conversations with Sheeda and
Nikki.
The month of April is Financial Literacy Month. We have a special guest with us today. I just want to start off with what is financial literacy, right? So financial literacy refers to the ability to understand and apply different financial skills effectively, including personal financial management, budgeting, and saving. So this month really is for people to reflect on their personal finances and to improve their financial state. So it really is for people that really want to build their finances or really look at their finances, and maybe there's something about their finances they don't like and they want to change it. This is the month to do so. So if you haven't started, April is the month to start.
Agreed. So with that being said, I'd like to introduce our guest, which is Miss Chantelle Wilson. She is the owner of CC Consultants, and she's going to tell us about her business, how she helps her clients with their financial goals, as well as be able to help us and our listeners to see what we can do to help our financial situation. Thanks for coming on, Chantelle.
Yeah, thanks.
Thank you, ladies, for having me. Definitely appreciate it. Financial literacy is definitely lacking in, especially the African American community across the board. A lot of the people that I talk to, a lot of clients, we all have the same thing. We financial literacy in school. You have 12 years of grade school. And unless you elect that in like your high school years, or you go into a private school and they teach that, we don't touch on the basis of how important it is about your financing. And it's not so much how much money you make, it's how much money you keep, it's how much money you invest, how do you invest it, what is the ROI, just like different terms of money. Money moves fast. Someone can be making six figures and still be broke because you're not taught how to budget, and you're not taught, it's not even about the money, it's about how you manage your money. How much money do you keep? How much money are you giving away every month? We teach clients how to learn their own network. And your network is, you know how much Jay-Z and Beyonce is worth, but do you know how much you're worth? So you putting all of your information into a system and say, okay, well, if I don't have any assets and all I have is liabilities, why am I going out every weekend? You know, why am I buying some $127 shoes and I don't own anything? Right. Like the mindset is so backwards. My kids will not have name brand shoes and we don't own anything. And I always tell them, and they hate me for this, is if you want some Vans, you need to research that company. Who owns the company? Right. Like I was buying my fiance some stuff for his birthday last weekend. I'm in the middle of Target because I don't want to buy it unless I know who the owner is. Right. And I have particular owners that I want for what I buy stuff for. I'm not gonna say it on the show, but so I'm on an aisle looking for who's the owner. What do I need to know about this company? Because we do it for Black-owned businesses. Yeah. You know, I don't want to support that business, and we know it's Black-owned. We want to do all this research, but if I'm in Target, I'm researching the company right then and there because I want to know what it is that I'm putting in my body and this, that, and the third. But I also want to know, can I invest in this company? Does this company have an IPA? You know, are they public or are they private? How much are their shares? How much do they have any dividends? As far as like, if I was to buy stock, would I get anything back, you know, on a quarterly basis? Things like that. So I have financial literacy in my mind with everything. And so I have a credit card that I talked about on one of my videos as a cash reward card, right? So I use majority of my purchases on the cash reward card because if I'm spending their money, first of all, I'm spending their money and they're giving me money to spend their money. Yeah. So I think I have like $20 from last week's or last statement just from using the card, right? Yeah. That's $20 I couldn't have gotten if I used my bank's debit card, right? Mm-hmm. So I'm also teaching my kids that added them as authorized users so they can learn the financial literacy hand to hand. Because most kids are like, Mom, I don't want to sit down and read nothing. Okay, well, you're going to use this credit card. Right. You know our zip code. Okay, so for my kids, they're kind of struggling with 30% utilization because I gave them each a card and they have $100 limit on their cards. So I said, even though you have $100, you can only spend $30 max on the card. And they don't really have no money to take the, to pay the $30 back. Shoot. But anyway, so I was trying to explain to them anything over 30% utilization, the financial institutions, they're thinking that you're living off of this money and that you need them. And so you want to use the money, but you don't want to max it out, especially over your statement date. So for me, I do almost max out this one card, but a few days before the statement date, it's going to be up under that 30% before it hits my credit report, because I know they report on the 2nd on this particular card. So just being financial literate on everything, just having control over your finances. Those 3 digits have so much control over your finances. It is ridiculous. So we recently moved to a higher income area last May. And just from that zip code alone and my credit score increasing, I saved over $660 on my car insurance. So I'm just like, who don't want to save that type of money? You know what I mean? Like, who don't want to save that type of money on their everyday life? That can be in a savings. I can invest that money into something else. So it's just like financial literacy it has so many caveats to it, and you can just grow it from there. So right now I pour into that and my kids about financial literacy, like the importance of it. So when they get to high school and college, because they go on to college and they have to get their own apartment or whatever, they're not going to have many people running their credit report. Oh, you're going to have to put a down payment on your apartment, or you're going to have to put a down payment on your car, or $2,500. You don't have a credit score, so that's basically a negative, mark towards you. We don't really trust you because you haven't built up any history. So at this point, when they leave my house, they're going to have close to an 850. They're going to be financial literate when they come out of my home, my kids. And I try to teach the same for my clients' kids too, So
what age did you start really putting that on them to learn financial literacy?
I think it's always been some form or fashion, because I didn't have this mindset when they were first born. But my dad has always been an entrepreneur, so we've always worked for him in that capacity. Like, we'll do snow cones, and we've always had our own business in that aspect. So when they go to Chicago for the summertime, they make money. They know the importance of earning money. You have to work to earn your money. And then you get paid for your work and your work ethics, because he'll pay them extra. They did a good job. So it's always been instilled with them. We've always gave them allowance, because I was a single mom with the girls. We've always gave them allowance. It's always been infused in some form or fashion. Don't spend all your money in one place. Right. Do you really need that? And of course you don't be as strict on them as, when they're younger. But now that they're older, I have real conversations with them. Is this a real item that you need? They love hair care products. They watching YouTube all day about how to do their hair and all this, that, and the third. So did you research the company? Who owns the company? Do you know much about the product? So I'm more hard on them now versus before. And I think entrepreneurship has always been infused into them because, they were my parents during the summertime. So it's just been throughout their whole life. But now it's like in your face. You gonna understand it, So, but I think any age you can kind of teach it. They can learn, like the babies know they can be bilingual. They can learn Spanish. They can learn financial literacy too.
That's true. That is true. Because like you said, since I was younger, my parents they've taught us about like savings. Like I remember even as a kid going to the bank, for my birthday, I would get all this money. So mom was like, okay, open this. We got to go to this bank this bank, up a savings account, you put your money in there. So if there's anything important that you want, then you can just go, to your savings and get it out. But you know that if you take it out, then that's you taking it out. Like you have to put it
right.
back. Yeah. So we learned about that too at a young age, just about savings and opening up a savings account. Even like writing checks when we were younger.
Right.
When she would go to the grocery store. So we were exposed to some degree about financial. And now that I have children, I definitely want to instill that in them as well. So
definitely. They need to be prepared.
Yeah, and me and Sheeda, we were actually talking, and it was like mine was the total opposite. Mm-hmm. My parents never taught me about saving. They never taught me about the aspect of money. And even now, it's hard for me to save. I think my mother, she's always been very frugal with the spending. She didn't if she could get something cheaper, she was going to get the cheaper version. Now, my father, on the other hand, that's where I get this from. If he want it, he's going to buy it. Period. So, and it does affect me today because I do have a hard time saving, because if I have that money in my hand, I want to spend it. It could be something that I may really want or something that I may really need. Something I could wait on sometimes. Something that, okay, take this money, save it, put it to the side. But I'm like, I got the money in my hand, I'm going to get it. So,
whew.
Yeah.
Yeah, honey, we're going to have to work on that. But you know what? You can't. And so like my mom, of course, she's better now, but you can't teach what you don't know. And it's so hard to instill in our kids what we don't know. So that's why I was like, it's so much more that I have to teach and learn myself in order to pass that down to my kids so they don't make the same mistakes. And so they are well equipped, well-rounded on the benefits of finances, how to multiply your money. You know what I mean? So like my dad, since he has cash money with his concession stand every summer, he gone. He can make about $50,000 through May, through August, September. Girl, the winter hit, it's gone. Because he just spend. He likes to spend money. And guess what? I contributed that habit too. I remember when I first moved to Texas, my mom had this credit card that I'm the authorized user on, and the credit card limit is $5,000. So I had a decent job here. It was just me and the girls. I don't have no family here. It was just me and the girls. So I would spend my check on whatever I wanted. And I wasn't scared if my rent wasn't paid, my car note wasn't paid, nothing wasn't paid. Because guess what? I got this $5,000, on this card. And I kind of put my mom in the bind because I was like, Mom, I'll pay you back. And I would pay her back, but it'll be at my pace, what I can handle or whatever. So to reprogram my mind, oh my God, that was hard to budget, to make sure all of my important bills were paid on time, and learning what to do to the money that I had in the bank. It felt weird to have money in the bank that was less than $2, because guess what? If I had $2 in the bank, honey, I was spending $150. Yeah. I was going somewhere. I was spending that $150. You know what I mean? Yeah. And it is a hard habit to change your mind and start saving that money. Okay, how can I make this money work for me? Because we've been taught all of our lives we have to work for money. Like we teach our kids, you have to work your dad's concession stand to get paid. But actually, money is supposed to work for us. So that's what I'm now teaching my girls. How do we monopolize the game, how we make money work for us? Because our counterparts, their kids have been learning this, watching their parents do this from generation to generation to generation. And so the other day, my one daughter, my oldest twin, she always ride with me. So we was going to put some money in one of my bank accounts, and we took the long scenic route, and it's got these big, beautiful brick homes, and then, here, just beautiful. And she was like, where else people get this money from? What they do for a living? We just having a casual talk. I said, this is generational wealth right here. These are people who have been on this land for years, probably since back in, before, after slavery stopped, and they passed on this land from family to family. And they have life insurance policies, which culture don't believe in life insurance policies. They might have had a $2 million life insurance policy, passed it down to their grandchildren, and they got the money and they, poured back into the family home, revitalized it, kept the land up, and reinvested the money. So that's how you keep the money in the family. Life insurance is one of the ways that you do that. But in our community, we don't believe in life insurance. We'll throw up a GoFundMe in a minute.
Yeah.
And it kind of gets under my skin, but that's neither here nor there. So it's just kind of being prepared for all situations, taking control of everything, holding yourself accountable. Adults hold themselves accountable for all actions. If I was to leave this life right now, would I leave a burden on my family, or would they be set? What did I leave them? Am I just gonna leave them this job? They can't take my position. You know what I mean? If I leave this job, it's gonna be posted tomorrow if I die. So what am I leaving my children? Am I leaving them to get it off the mud themselves? How they gonna figure it out? Or am I giving them a solid financial foundation on how to carry on their legacy, my legacy, and so they can be firm on all fronts? I think I went on a tangent right there. But those are the conversations that I have with my kids. I think it's so important. We are in the African American community. We are so behind the 8 ball on just literacy. It's beyond credit, so.
Yeah, I agree with that a lot. I think the Black community especially is so used to living check to check that they don't really know any other way. And like portion says, like you know better than you do better.
Right.
And the people before us was living check to check. They didn't really know how to manage their finances and things like that. But I want to start a new wave of thinking to where, children, like you said, Chantelle, our children have assets when we leave this earth.
Right.
Carry on and create new avenues of income.
Right. It's so important. It's so important. I get emotional around it because I'm just like, we are just so behind. And not only are we behind, we don't even want to know the information. Yeah. It's like, if you live in check to check, you spending more than what you're earning, and you paying a high interest rate, and you stressed out, like check to check and paying all your little money that's stress, that's anxiety. And it's a cycle every month. And you try to introduce a different wave of thinking, and it's like, no, I don't want to do that. Well, guess what you've been doing the last 5 to 10 years haven't been working.
Right.
Hasn't been working, honey. So why are you rejecting this?
Yeah.
So what I did late last year, I had so many subscriptions. I have 4 credit union bank accounts. I don't even know what was coming out of what. It just everything on automatic payment. And so I had put a whiteboard up in my bedroom, and I said, okay, I'm looking at my bank statements. This coming out here, this over $200 worth of subscriptions. Somebody didn't know I still had. You know what I mean? Like that could be $200 in something else. I probably got $200 back just by adding more stuff. But it's crazy the amount of stuff that we put money into that don't put money back to us. Like Hulu ain't paying me. Netflix ain't putting money back in my pocket. So you kind of like gotta make people think the things that you're putting your money into isn't putting money back into you. Last year I got approved for a home loan. And so I do want a big old house. I'm not even gonna lie. I want a big old pretty house, but I'm not gonna do that. I need a duplex where I'm gonna rent out one side, collect rent, and live in the other side. So I'm gonna buy me another property. So that's my another property that works to doing now. Is finding a duplex, and it's hard because this market is It's a seller's market. I mean, you put a bid in and they like $20,000-$30,000 over the asking price. So it's a bidding war out here. But that's smarter, right? I want another Mercedes truck, but I can't get one right now. I got to wait, So the old me would have been got one, but it's not gonna add value to what I needed to do at this point in time. So I had to think strategically and do things smarter and not harder. So.
So what I want to know is this: where do you tell someone to start on how to save? What's a good way for them to just start off with something and then work their way up?
Budget. That is the number one thing. What are you spending your money on? For me, even though I spend a lot of money on food at the house, I also eat out a lot. So, and I was like, man, I'm gonna have to curb my eating out, and I have. So you need to know where you spending your money. Where's your money going? I go through my bank account all the time. I said, man, I didn't even have to get that. That was $60. I didn't even need that. I done probably gave Amazon way too much money this year alone for the baby. For the baby. For the baby. For the baby, right? But so I would say, if you are serious about your finances, you really have to comb through what is it that you're paying for every month. And it's hard to look at your bank account. It is hard to oh my God, I paid for that. That wasn't even worth it. $25 at Chick-fil-A, that ain't even worth it. I don't even eat all the sandwiches no more. I get full quick. So it's like taking a hard assessment of where you spending your money at and being honest with yourself. And it does hurt, and at least it did for me. And just being honest with yourself. If you can't be honest with yourself, you ain't gonna never get ahead.
Right.
You ain't gonna never get ahead. You ain't gotta show it to nobody else. Like Avery don't know everything. I don't tell him everything. But being honest with yourself, budgeting, how much money do you want to spend every month? So if you work a 9-to-5 job and you spend $10 every day at work, how much is that? That's $50 every week, and that's $200 every month just on food. Can you really afford that? Every day it seems like it's feasible, but if you take a snapshot of the whole month, $200 on fast food, that's way too much money, and it's not giving you a return, especially on your health. So what are you actually spending your money on, and what can you do with that money? So if I spent $200 a month on food and it didn't even satisfy me for about 5 minutes after I burped, that was it. It didn't really do nothing for me. It didn't do nothing for my health wise, after that. So what can I actually do to $200?
Right.
Put it in a savings, put it in a CD. Do I invest in something? I know a lot of times I go on my Facebook page and I see my friend, I done bought so much stuff on Facebook. One lady selling Mary Kay. I bought some Mary Kay. One lady selling candles. I bought some candles for her. One guy from school got t-shirts. So I invest in other businesses, small businesses. I don't post them all, but I do that. I get joy out of supporting people who I know. Some of them I don't know. So I do that with my money because it boosts up their morale. Like somebody believes in my business. Somebody supported me, and that feels good. Just sending somebody a cash app. How much is your t-shirt? $20. Okay, how much is shipping? Oh, don't worry about it. I said, what's going to cost you to send it to Texas? How much is it? So I'll pay for the shipping. Just supporting other people, because at the end of the day, it's more than, I don't know, that's just me. It's more than just you. It's gonna come back on you on the back end anyway. It's gonna be a blessing that you can't even pay for anyway. So just taking a hard look at your finances. That's one. Two, what are your goals? Okay, so if savings is your goal, what are you saving for? So you want to save to buy a house, you want to save to buy a car, you want to refinance your car. what are your goals? So that's just a hard conversation that you'll have to have with yourself. If you want to invest your finances, invest in with somebody who is a pro. Don't ask nobody in your family about investing because they're gonna tell you no. So and ask somebody who's professional in doing stocks and options and all of that. So I would say those 3 things. Yeah. Ask a professional, not your family, because they're gonna steer you wrong anyway.
Right.
So their heart is in the right place, they're gonna steer you off because they scared. They never made the move.
Yeah, that's true.
So when it comes to your business, what are some things that your clients come to you about, or some things that you've helped them with and, been successful at?
So we offer our clients 12 services, and they all have different things to help clients. So like one of my agents, her father's finna pass away, right? Mm-hmm. And that's a reality that we don't want to face or address. So with our protection plan, credit restoration is the main thing that I promote, but it's not everything that we do. So one of the things that we have in our protection plan is a will and trust and a power of attorney. Yeah. So my sister's mom just passed, and now the siblings are fighting over who owns what, because mom left the house, who owns the house. Only one sibling was close to the mom. The other 3 didn't even talk to her. So why they fighting over the money and the property is beyond me. But the mom, I told my sister like a few days before her mom passed was, okay, y'all need to have all this in writing. Now they don't have that. So now they got to fight in court. So my agent, she needed it for her father because he's going to pass away. And they're talking with him now about final arrangements and how he wants his funeral. Like, that just hurts my heart to even talk to her and know that she has to go through that. But he's a client, not for credit, because he doesn't care about that at this point. He at the end of life stage. Hospice is in the home. They're making him comfort at this stage. But she had to get that will and trust document in order before he passed. He signed everything. I'm going to leave everything to Alicia and my son and XYZ. So you don't have to go to court and fight over my assets for years. It's going to cost you at least $3,000 to even talk to a lawyer to sort all this information out, when you can become a client and have all of this information for less than $100. All of this for less than $100. So it's just having your life in order. So for that, the protection plan. So if he go into hospice, they know to talk to her. They know his bank account information, everything. They know to talk to her or the son. It's not a conflict. It's still gonna be a conflict in the family, but it's in writing, black and white. He signed to talk to me. You know what I mean? So nobody can dispute that. So that is like a major, major thing to have that in place for the families. Also, just the budgeting tool, like, that is my number one tool. So I had a personal loan with one of my credit unions, and this is before I got my stuff together, but I had a personal loan with one of my credit unions, and if I was to pay them back what I owe them at the amortization that they said that I can pay them back, I will pay them 3 to 4 times more, right? So with this budgeting tool, if I say I owe $3,500 and my payment is $120 a month, my interest rate is 15%, it's going to say, okay, well, in order for you to eliminate $2,000 worth of interest rate, you can pay this amount of money each month, and it's going to use your just about the same amount of money that you're paying already. It's not going to stretch your budget, but it's going to make sure you're not going to pay that $2,000 in interest rates. So that's just an awesome tool. I love it. I've done that with my car note and other loans that I have, other bills. So it's awesome to eliminate thousands of dollars of interest rates, student loans, all of that, by using this tool to show me how to pay off my debt a lot sooner. So I'm not giving you all my money. So definitely.
Right. I kind of wanted to touch a little bit on something that you said earlier about the credit cards. So when you were saying about 30% usage of the credit card, so any credit card that you get, you should typically only use about 30% of the limit that you have, correct? And why
or less.
Yeah, or why is that?
Well, for one, your credit score will drop because it's gonna look like you're unstable and you don't know how to budget. That's just across the board. Anything over 30%, your score is gonna drop, and that's gonna be a hard drop. Especially depending on if your credit file is thin, you ain't got too many things reporting to your credit report, or you just got that one credit card and you ain't really got nothing else to bounce off of. It's gonna hit your score hard. But if you got like 4 or 5 credit cards and you got installment loans, you got other things that you're paying on, you might not get you hit that hard, but it will hit you hard over that 30%. It's gonna drop your score. Now the amount is dependent on how your credit file is built up.
Yeah.
And that's just because Miss Nikki know how to budget. You know, we trust her with her money. She need our money, but she don't need our money. You know what I mean? And so as long as you teeter up under that 30%, I think 10% is a sweet spot, but 30% is that hard line. You don't want to go not even 31%. You're going to be in that red zone. So, yeah.
And that's something really important, because I think that doesn't get talked about. We think, oh, I'm gonna go ahead and max it, and even if you max it and you pay it every month on time, you don't look at the other factors that are involved with that as well. So that's a great takeaway that I think our listeners will appreciate to know.
Yeah,
definitely. And I don't recommend paying it down to 0 either, because 35% of how your score is calculated is how you're making your payments. So you want to have at least 1%. So if you're going to leave $2 or $3 on there, I think that's awesome. They know that you're using a card and you have some type of activity on the card, because the credit bureaus don't know that the month-to-month activity. They just know what's reported every 30 days. So if it's showing 0 every 30 days, are you using a card? They just know it's current.
Right.
But they don't know that you're paying on it every month. Only the company that you're utilizing it with. So if you want to go to that ABC company and ask for a credit increase, they're more liable to give it to you. But as far as the credit bureaus, they don't know that you're actually using the card. Yeah. So you want to leave at least 1% on there. I always say like $1 or $2. You can let that hang every month. Just so there's some type of activity. And then if there's no activity on the card at all, depending on who the banking institution is, they will close your account. A closed account will drop your score at least 50 to 100 points. And they say debt is bad, debt is bad, but it's like it helps you in the credit world. They want you to be in debt all the time, but you have to know how to manage it. So if you ever paid off a house, paid off a car, your score is going to drop because your average length of credit history has dropped as well. That has to be at least 5 years. That's another whole here about too. So it will drop, and then it may come back up depending on how you're going to build up your credit file from there. So here's an example. When I got my latest card, my average of the credit history was just at 4.5 years, right? So it's not good, but it's not bad at all. I'm almost at that 5-year mark. So I applied for my last cash reward card, right? And it dropped my score. Because for one, I got an inquiry, and 2, it dropped my average length of credit history. So I'm like, Mom, I need another card. Can you add me on to one of your cards? Because I know she done had her cards like 15, 16, 17 years. So if I add another card that's been in good standing for 15, 16, 17 years, that's going to boost me back up to that 5.5 years, where that's going to boost my score up too. So that's another hairball right there. But definitely no more than 30%. And I think if you don't know how to budget, don't even go near the 30%. Stay under that 20%, especially, some clients, they be having $100 secure card, $150 secure card. And I'm like, well, you can't spend no money. You can probably buy some bubble gum and that's it. Cause you can't go under that 30, you can't go over. You can spend $45. That's it. And I don't shame them because that is truly where they can start at. You can build from there. It's just harder to build from there. The lower the card amount is, the harder it is to build because your spending habits are still not stable. You see $300 credit card, secure card or unsecured, you're going to spend $300. Your budgeting habits are not tight enough where you can just step under that 30% utilization. So those cards up under 300 is kind of hard. I try to tell people to start at 500 if you want to start building your credit. And you can go from there. And then you look at it's more stable on your credit file as well when you have something that's starting at a 500 limit, even though you should be starting at 5,000 or more. But 500 is great for a beginner if you building up your budgeting habits.
Yeah. So I heard you mention like secured card and unsecured. So can you just tell us like what's the difference between the two?
So secured card is you putting up your own money as collateral. So I don't really trust that you're gonna pay me back. So I'm gonna have you use your own money. So some people they'll say, and some people can get denied for that too. Their credit file is just that bad. But they can start from $300 to $500. I think you can do up to $5,000 depending on who's offering the banking institution. So you're putting up your own money up front and you're paying yourself back for a length of time. I would suggest some institutions will allow you to do at least a year, and then they'll see what your payment habits are and how you've been using your card, your credit card limit. And then after a year, they'll say, okay, well, we're going to do unsecured with you, using their money instead of your own money. So secure is using your own money as collateral. They're looking at your habits. They got an eyeball on you. You're under the microscope at that point. And then so unsecured, okay, we're going to let you use our money.
Right. And then you mentioned about the card for your children that you use. So is that like a secured or unsecured card too?
That's unsecured. That's unsecured. So that's why I told them only $30. Only 30. What was funny was when I was what I was telling them was when you add a authorized user with this bank, every federal, it tells you you can put a stop limit on the card. But when the cards got in the mail, it gave them my limit. So I'm like, they don't have, but I guess when they actually spend it, they won't go up to my limit, but it should stop them at $100. And I told them not over 30. They with me all the time anyway, because they go to school from home. So they shouldn't go over that $30 limit, but it's unsecured and it will be reported to their credit file every month. And as soon as they start using it. Yep.
Right. That's definitely something I would want to, at least with my oldest, because my oldest is 14. So
definitely get her started.
Like financial literacy, budgeting, make sure you don't go over your limit. That's something I definitely think needs to do for her.
Mm-hmm.
So Chantelle, do you want to just mention the name of your business again and where our listeners can find more information about your business? If you wanted to just drop like your IG or Facebook or the best way that they can contact you, if they needed help with any of your services.
If they need any help with my services from A to Z, I do consultations. They don't have to sign up. I could just look at your credit file and tell you what you need, and you can go from there if you don't need anything else. So they can find me on IG under CC_consultants. They can find me on Facebook under Miss Chantelle Nicole. I'm building out everything under CC Consultants, so I don't want to name them yet until they kind of fully built out. Okay. And because I'm learning that everything has to match. So, so mainly Facebook, because I think that's what gives me the most credibility. Or my number is all over social media, so they can definitely contact me at 214-605-2545, or on social media, Facebook, Miss Chantelle Nicole, IG CC_consultants.
Great. Thank you so much for coming on.
Yeah.
So for today's takeaway, we have a quote from Michelle Ruiz, which is, if people are doubting how far you can go so far that you can't hear them anymore. Thank you so much for joining.
Yes. And then I do want to just thank all of our listeners and all of our supporters for the positive feedback. We truly appreciate all of the text messages, all of the positive feedback. I mean, I'm just like, over every time I hear something positive about our podcast, or people have gained some type of value, like that just warms my heart so much. So I just want to say thank you to all of our listeners, just for all the support. And then for our guest today, Ms. Chantelle Wilson.
Yes. Thank you so much, everyone. With that being said, this is Real Conversations
with Sheeda and
Nikki.